is private credit? Okay, this has a big to-do because you're going to see this makes the market volatile. And a lot of people are sitting here, and there was a take on, it was a caption this weekend on CNBC. And the commentator asked two people, they're like, okay, what's this private credit stuff? And they're like, well, it's like subprime, like this. Well, you can buy this over here, and if they devalue that thing to book value, here's what's going to. And they're like, okay, can somebody make it make sense? Let me make it make sense in the easiest terms. Remember back in 2000, let's say 2005, 2006, 2007. There's those things called subprime mortgages. They were mortgages or loans. Think of it that way. Loans to people that didn't really have that great a credit, probably shouldn't have otherwise qualified. And when all the shit hit the fan on that stuff, it did collapse. What you had is people just kept doing those bad programs while the values of their homes were going up. And then when things started to really get to true value, it started to crumble. Let me explain. So here's the private credit. Let's say I'm a bank, and let's say you're an AI company, and you come up with this great idea. Okay, you come to me and you're like, Dan, I need $1 billion, because I think NVIDIA today is just buying another company for something over there. And so you come to me and you're like, I need $1 billion to buy all this data centers and all these other things. So I'm like, okay, well, based on the valuation of Meta, all these other companies, I can give you the $1 billion. So now they're coming back saying, what's the value of these companies really? Kind of like, what's the values of those homes really back in 2006, just when everybody needed to buy a house? Appraisals were inflated. People were just FOMOing all over the place. So that's where you're seeing people, banks going in and lending all these AI companies and data centers and all these companies money. Well, how solid is that money? So here's what they're saying. Okay, they're saying, well, I lent company A money, and we valued their stock, say, or they're valued $100. Okay, because they're kind of the same as NVIDIA. Maybe. Well, let's say over time, NVIDIA just, they skyrocket to Amazon.com. You know, they're that company. And then those others, Package.com and PackageDeliveries.com and all those companies, they just failed. Okay, so now when you try to reevaluate I lent you money for your AI company, but now you're not doing as good as NVIDIA, who I valued your company off of. And so I'm thinking, this isn't maybe a good deal. So what's really the value of your company? Well, that's the unknown. What truly is the value of these companies? People don't know. So now investors are saying, you know, I don't want to get stuck in this thing because if the valuations come in lower, then my value's low and it's going to plummet. That's basically what it is.